Can you see that difference in price? So you can literally feel how the algo is switching the gears from so small opening gap here, we're gonna mark this out because they are important. So whenever you have like a price difference between closing at 5 o'clock New York local time and reopening and there is a gap, I like to mark them out because they normally are important for the price action. ADR is forming. I can't see anything very interesting for now. So see how price is working this area. So we are closing the gap now. There is a volume imbalance, by the way. Even if you want to trade it, I don't see an entry here. You see? That's why I'm marking them out. Now we are breaking through. Standard deviation level here, midpoint level, IDR level. And we see a clear rejection with a big candle afterwards. I think like this one is hard to trade because like you would literally have to enter already here. When you have such a big candle, you're just not getting an entry. Look at the volume imbalance over here, which I mentioned before. So we are making new highs. Not really any entries which I would take. Session is over. So now we are going into the ODR. What this model can tell us so far, what you see. Based on what we have seen here, I can't tell actually where price is going based on the ADR. But now price extended to the up, so it will be definitely not a downside expansion model. It can't be a downside expansion model anymore. Could be a range upside expansion model, but so far, like if you look a little bit to the left, you know that it's right now, it's unclear. Let's draw out, you see this price action happening over here. So what do we have here? Previous RDR high. So let's look closer now. 1, 2 rejections from over here. And the third one, we have a volume imbalance over here. So let's see, like this looks like supporting. We have another one over here, the small one over here. Let's see. Price is going down. We have another volume imbalance over here. So now we get a confirmation. So you see how the DR high from the ODR is matching almost the DR low from the previous RDR. That's very interesting. That's normally an area where you can say, like I would confidently say, it's a very low chance that we will break through this level. So I'm quite confident that this will be not taken. So if we look to the left again, another volume imbalance over here. So let's see. Nice rejection from the volume imbalance, but we know we have 2 more up here. One candle is not enough for here. Let's see if we get another one. Second one, but bouncing from here. Going above. I have to draw this more out. So now we're coming to this area, which I would look for an entry now. Okay, we're going directly above this. That's my trigger. This is now a retirement setup. So you get a confirmation to the downside and now price comes up to the opposite level in this area, 75% of the IDR, preferably touching the other IDR, but even like here it would be okay to enter. So retirement setup, I'm taking this. Stop goes as usual, 2 ticks above the DR. Target, new low, and now I need a standard deviation from the ODR. I'm taking this quick. 0.5 is here. Okay, so that's my target. And let's see how it will turn out. Direct rejection from the DR level. Another one over here. So like I was a little bit too early, so you could have taken this one, 3 chances to get this trade. Even with crazier risk-reward ratio than I had. Volume imbalance over here. So we are going directly. That could be a low-hanging fruit, by the way. If you take like a retirement setup, like you could take partials on the opposite again. So you're entering around here and you take your partial over here. That would be completely fine. Look at the rejections over here from the volume imbalance here. Move the trade a little bit over here. You see that? 1, 2 rejection. It's not even able right now to come back to this volume imbalance. So maybe that will happen later. Stop would be on break even for me. I think I don't have to mention this anymore. And now we're getting the trade filled. And we are leaving another volume imbalance on the way down. So that's 5.5. So that was a good trade. Anyone has seen this volume imbalance over here? That's also additional confluence for the targeting I did. Not only 0.5, not only a new low, also the volume imbalance over here. So we have to go through this if we want to make a new low, which is normally a good sign. Good. So now we are taking the volume imbalance here. I think I want to re-enter. We see a rejection from the DR levels, like we have the volume imbalance over here. So we're gonna take another short trade. Stop 2 ticks above DR and IDR levels. Yeah, let's see. That was close. Here, yeah, okay, it was 1 candle early again. So you see that? That's a beautiful price action. And target would be here. And I'm already out of this trade again. Targeting, just because I was not even looking at it. So I was not expecting the price come down. First of all, volume imbalance over here. Confluence for my short trade. Target, new low, next standard deviation. So the 1.5 standard deviation. Good. Okay, who is the smart pants in the chat who's telling me that's a loss master? You have spread. You don't have spread if you trade a future contract. If you're trading a CFD, then it's a different story. But like if I would trade a CFD, I would factor in the spread. If you trade a CFD, you can't take the stop I take. That's correct. But not because it's a loser, because it would be one. That's my stop. With a future contract, I'm never gonna get stepped out. Who has 2 tick spread? Futures don't have spread, friends. But like, I understand what you're talking about. Don't worry. If you're trading like a prop firm account or you're trading a CFD account, all the trades I'm showing here, you have to put your stop higher because you have a spread for your CFD account. So when you're trading a funded account, you always, like when I say 2 ticks, that counts for the future. So if you trade a CFD, put it, let's say up here, or I can't help you with that because I'm not trading that stuff. So my stop is on futures, and for me, I don't have this problem. But anyway, like if you trade it, like you just have to factor it in. Okay. So looking at price action, we're going even further down now. Look what we have here. That's again our opening volume imbalance over here. So we are close to 830. Volume imbalance over here. We filled this volume imbalance. Session is over now. 8:30, so that was a news, most likely. 9:30 now. Let's look at the models, for example, like what people said, range expansion, range trading as we see. So ADR here, ODR up here, and now we're opening into the RDR down here. So we are not expecting anything big to happen. So the pattern for price action, what we would expect would be ranging in an area for the RDR session, slightly with the downward because we are coming down. We don't expect big movements up or down. So no confirmation yet. Now we are getting confirmation over here. We are also reaching the 0.5 immediately. So the low hanging target is already touched. So the next target would be 1 if we take a short trade. So we're looking for a short trade, no rejection from here. 1 candle rejection from here. So right now we see like more rejection to the upside. So price wants to go a little bit higher in this case. Let's see if we will get something around. There is a small volume imbalance here and another volume imbalance over here. And now we are leaving 1 volume imbalance between these 2 candles. So let's see if we will get something around these levels here. 1 more candle. That was too quick. So nice rejection here, but too quick. No, I don't want this. See, we keep on rejecting from the IDR levels, so I'm not very confident yet. Again, what I told you before, you have seen again this candle. Same like I told you in the other example, look at this candle now. You saw going even below the DR and then getting pushed in the last seconds of the closing. And we keep on rejecting from here, so I don't want to take a short right now, I'm waiting. Now we're going above the mid and the opening price. And we have another retirement setup here, right? Very clear, very simple. I don't like the big wick, but because this is backtesting. So if this would be a real scenario, I would not enter here. For the backtesting purpose, I'm gonna enter here most likely if the risk reward ratio is fine. But I would wait the next candle in a real live trading scenario and I would try to get an entry a little bit higher over here. With backtesting, that's not possible because the candles are not moving. So let's check if we can get a good risk reward ratio. So 2 ticks above the IDR, low would be, target would be a new low in this case. 3.9 is still okay. Technically, I would have to put my stop over here for this trade because of just of the range. So let's take this trade here. Yeah, you see, so this candle would have given me a better entry. But for the backtesting, it doesn't matter at the end of the day. If I see something like that, I try really to get into the best. Like what I would be looking for would be finding an entry here around these levels. And I would really try to have the best risk reward ratio possible here. Let's see. Here we have a nice rejection from here now. So now the price action looks cleaner. Now we switch the gears in the algo from rejecting from the downside. Now we are rejecting from the upside. We are breaking below the opening and the mid price of the IDR. We are rejecting here. Can you see that difference in price? So you can literally feel how the algo is switching the gears from going to the upside and looking for liquidity inside this leg and switching back to going to the downside. Like, no time wasted from the algo. Like we go up and you see how much energy price and the algo had to invest to bring the price up here. We literally spent like almost 1 hour bouncing between IDR low and the mid price. Even here, body closes are not going high. So it took a lot of effort for the algo to drive the price up to these levels. And now you see how effortless the algo can bring the price down. So nice rejection to IDR levels, and that's filled, right? Yes. 3R. That's it. Let's see what else is happening. So that was nice. Now going up to IDR, directly coming down, making a new low. So that would have been a potential entry. I was not focused too much on it. Whenever you see this pattern, rejection from here, quick wicking up to the other side, and then like especially these candles after rejection and these big body candles, I like them a lot. I like it when it's happening over here and then we see a candle and then we have a chance to enter. Right now there is no chance to enter, except you would have tried to directly trade the rejection from over here. It's already almost 3 o'clock, so last hour. I think I will take another trade here. So 1, 2, 3, 4, 5, 6 candles over here. I'm gonna try another trade right here. Stop 2 ticks, 1, 2 ticks above this high. Of course, if you have spread, you can put your stop over here. Target would be over here. So you can't take this trade. I can take it in this case. 1, 2 ticks. Let's see. Stopped out. Price went exactly to my stop. That's happening to me. I'm fine with that. That's the session. Why you didn't short 11.45 rejection a few times? 11.45. Can you see how price is bouncing here and bouncing here and bouncing here? That's the reason why I don't take the trade over here. But anyway, like even look at this. Like even if you would take this trade and you would short from here, it does make a big difference wherever you put your stop. Let's say you have your stop over here. The trade comes down here. You would have your stop already on break even, right? Like even if you would take this trade, your stop would be on entry when we come down here. So that would be just a break-even stop out. I'm pretty sure that I just talked the last 5 minutes or like at least 30 seconds about that price is bouncing between mid and the low IDR, right? So whenever you have a situation, like look at this, like we have 2 wicks which are really rejecting from over here, right? But we have 1, 2, 3, 4, 5, 6 candles rejecting from the lower area. That's the reason why I didn't take this rejection over here. My thought was very simple. Like I didn't like all the rejection from here. It gave me the impression that price wants to go higher.